The Sustainable Development Goals, or SDGs, were adopted by all United Nations member states in 2015 to end poverty, reduce inequality, and build more peaceful, prosperous societies by 2030. Many of the global challenges to development are especially salient for the children and youth. It is their future that depends on how well these SDGs are adopted. Where do our children or the youth stand today?
There are still a lot of kids
that can't go to school
because their families
can't afford their education.
Other kids have to walk a long distance
and even cross rivers and climb mountains just to go to school.
A lot of kids cannot go to school because the parents don't have money.
People are using up the world's resources
without thinking of the consequences,
like global warming. We have a lot of natural disasters
like super typhoons and forest fires
that destroy the livelihood and homes of many people.
People's waste are reaching the oceans,
killing turtles, fishes, and other marine life.
The number of animals are getting smaller and the food supply is getting smaller.
Why do you think their numbers are getting smaller?
Because they're getting endangered. The people have been cutting the trees in their habitat.
A lot of people are getting sick,
especially because of COVID-19. Everyone is affected.
Yung ibang people hindi makapunta sa hospital pag sick sila.
What is the ideal future for our children?
Sana lahat ng bata ay mabigyan ng pagkakataong makapag-aral.
I dream of a future where no kid gets left behind.
I hope people can start doing their part in saving the earth
by doing simple acts
like recycling or bringing our own water bottles
for our beverages.
Our family has learned not to use plastic bags, and I just hope others learn how to do that too.
Sana walang bagyo na makakasira
ng mga pinaghirapan
ng aming magulang.
I wish for a greener environment. Less pollution.
I hope governments and people work together so we can fight any virus
or any sickness
that comes our way.
I hope that everybody has an access to medicine and proper nutrition.
Sana may pagkain mga pamilya para wala nang maglimos. All of the kids have to stay healthy. We dream of a future where every child thrives.
Every child lives in a clean environment.
And every child has a fair chance in life.
Now more than ever, we must work together
to make the world a better place,
to ensure healthy lives, improve access to education,
to combat climate crisis.
Aligned with the ATRAM's mission to engage, inspire, and collaborate
to build a financially secure future,
we are committed to building that future where no one is left behind.
We have adopted 3 out of the 17 SDGs,
aiming to make a positive impact,
as well as ingraining more responsible
and sustainable business practices within ATRAM.
At ATRAM, we value our children's dreams. Let's make it happen for them. Through the ATRAM Sustainable Development and Growth Fund, we'll invest in companies that embrace sustainability and believe that this is key to a better Philippines and a better future for us and our children.
If we be nice to our planet Earth will be nice to us.
Invest to thrive. Invest together.
Hello and good morning, everyone. We appreciate you taking the time to join today's special market update webinar. I am Jaja Monzon, Product Development Manager and your host for today. As the National Capital Region reverts back to enhanced community quarantine or ECQ starting tomorrow, brought about by the surge of COVID-19 cases and the imminent threat of the Delta variant, many have raised concerns on how the stringent quarantine restriction will impact markets in the coming weeks and months ahead. In line with our mission to provide you, our clients, with effective investment solutions in a timely manner, we at ATRAM bring you the special market update webinar to be able to address your concerns regarding the effects of the upcoming lockdown. And of course, to be able to look at this as another opportunity to position your investment for long-term growth. Before anything else, I'd like to let you know that this session will be recorded and that copies will be disseminated as soon as possible, as well as posted on all our social media platforms. Also, please don't forget to visit our website, www.atram.com.ph, for more detailed information about all the funds that we offer. So, without further ado, let's go ahead and kick things off with ATRAM's very own Equities Portfolio Manager, Nicanor Yumul. Hello, Noy. How are you today?
Hi, good morning, Jaja. I'm good, Yeah.
That's good to hear. Okay, Noy, so let's dive right in.
All right. Good morning, everyone. Again, thank you for attending this market update. This is part of our initiative amidst this volatility to help our investors make sound decisions in this volatile environment. So for Philippine equities, as we've seen, it has been very volatile since the start of the pandemic, since the start of the year, and actually even in the past few days. But in a broader perspective, it's more of a range bound right now. But every time there's some announcements, so for example, on COVID resurgence, reimposition of lockdown, we see that jittery reaction on the market side. Now, what we want in the next few minutes is to help you, to guide you in terms of your investment decisions. So this is the time not to be jittery or not to be shaken by volatility, but to make decisions based on data. So in the next slide, let me start with this one. So one of the main things that we look at when we make our outlook or how we see Philippine equities and Philippine corporates in the next coming years is looking at their earnings. Earnings drives valuations. Earnings are intact, are independent of sentiment, and something that we can rely into. So corporate earnings at the start of the year, we said 45% growth for this year, and then followed by another 12% next year. Unfortunately, we had the initial rounds of lockdowns in the late March of this year, and we had to adjust our estimates. So we adjusted it. Thankful to the CREATE Act, it has a positive impact on the bottom line. So it was translated to a 31% growth this year, followed by another 30% next year. Now, this one definitely is another curveball. There will be some adjustments on this one, but we need to take a look at how deep the potential adjustment will be. But before I go to that one, just to remind everyone that this period is the earnings releases period. So our team has been quite busy attending corporate briefings, then analyzing earnings and guidance from the companies. So just a brief background quickly on that one. So for the 2Q21 earnings releases so far, so 63% of the index has reported already. The sequential improvement that we are expecting, it's happening so far. So for 2Q21, just a quick context on this one. So 461% growth, but remember last year, 2Q20, the corporate earnings dipped 80%. So in order just for the companies to go back to that level, they need to grow their earnings 5 times using that base. So part of this is on a base effect level. But what's important is that for first half for this year, we're seeing 100% growth so far. It's broadly in line with what we are initially expecting. There are some misses, around 40% from the original expectation. 40% are in line and the rest are beating our estimates. But then again, part of it needs some adjustment. So the new lockdown will temper our 2021 expectations on the earnings side. But how much? So we can't provide yet you the final number. what we want is to make it a definitive adjustment. So we need to settle first with the actual earnings releases for 2Q21. I mean, then we can guide you on that number. But what's important is the range or an initial estimate of what that number would be. So at the current lockdown that we are seeing right now, that was recently announced, and then adjusting our estimates, potentially that could be a 5% downgrade on the initial absolute earnings numbers that we are looking at. To going into next year, it will be at a much lesser extent, but definitely what we want to look at right now, if whether we need to change our outlook or not, is the percentage of the 2022 earnings that will happen as a percentage of 2019. Again, our message to investors that yes, 2021 is definitely something to look at, but remember, have that perspective and horizon in mind that in a few months from now, give it 3 months, market will no longer be looking at 2021 earnings. The focus will be on 2022 earnings. And our outlook is based on that one. So for 2022, initially, we are looking at earnings of the companies, at least the listed ones on the PSEI, to hit 102% of 2019 levels. But because of what happened, that one needs some adjustment. So it may fall on the 96 to 98% range. Definitely, that doesn't materially impact the expectation in terms of the growth that we are looking into 2022. But we need to make that fine-tuning. And eventually, actually, moving forward, it also needs some monitoring as well. Now, this is on the earnings side. Now, let's look at the broader metrics that we need to watch out for. One thing that we need to highlight is that we've seen 2 lockdowns this year, right? And 2 market downward trajectory for this year. The last portion of the first quarter of this year, and now this one recently. So just to guide everyone on what differentiates this one from what it was at the start of the year. So in the next slide, we're having a threat of a COVID resurgence happening at a time when vaccination pace is accelerating. So remember, at the start of the year, there are a lot of concerns. So vaccination rate is not yet even picking up. And second, the most important one was that can the government execute? Can that vaccination rate happen at the pace that we are anticipating? Concerns on vaccination hesitancy, vaccination execution of the LGU. Right now, when we are looking at what's happening on the ground, the government is able to execute. It's happening. So in terms of the vaccination rate, we're hitting around 500 average 500K level already. This might not be too sustainable. There will be some spikes here and there, but definitely within that range is very good for the outlook on the vaccination rate. And more importantly, the policy of concentrating that vaccination in the key economic zones of the country. So Philippines is one of those countries where economic activity is largely concentrated on a certain region. So in the case of the Philippines, it's NCR, so Metro Manila, and then plus other surrounding regions. So if we can save Metro Manila earlier, then definitely that has an impact on the recovery. And that's what's being done recently. So as we've seen, so for Metro Manila, 20.6% of the region already has 2 doses. And this is expected to accelerate even further moving forward. One of our conversations with a health expert recently is saying that if this vaccination pace of around 300K is sustained, Metro Manila might actually hit herd immunity closer to the late fourth quarter of this year. On our end, on a nationwide basis, we might hit herd immunity on the first within the mid of 2022. Now, this is important. So it's a bit painful, the lockdown that we had recently, that was announced. It will be happening tomorrow. But in terms of proactiveness, this is what's important. So we've seen this happen in Indonesia. We've seen this happen in Thailand. It happened too late, the proactive moves. So this one, it might have an impact on the estimates, at least as I've mentioned a while ago. But if it gives us clarity that the trajectory towards recovery is clear with this move, then that's very helpful. What has been proven since the start of the year is that a sustainable reopening is only viable via vaccination. Now, so in the next slide, what I wanted to touch on a bit right now is on the market side. So one thing is on the corporate earnings, the actual performance of the companies, the expectation on that one, but what's the market thinking, right? And what's the market doing right now? Now, just one side on the corporate first. There are some concern. So in our recent meetings with the companies, for example, some of them are closely monitoring this lockdown, how it will pan out, but definitely on their guidance. So at least the large ones. So at 2 to 3 weeks lockdown is manageable for them. But definitely it's worth monitoring on both ends. But what we've seen is that on the corporate side, there are a lot of buybacks. So this one just lists those that are disclosed on the PSE, but definitely there are also signals of owner buybacks. They are not here, but they are reflected on the dealing side. We can see them. So what it does is that it shows you the confidence on the corporate side. Definitely the outlook. There are things that needs to be monitored, but in terms of valuation, you see that signal already. And that's a strong one. So again, we can do our end on the research side, but in terms of information, companies will have the priority. They have an advantage on the information side. So sometimes you need to look as well to how they are acting. And this buybacks to me is a positive signal. Now, on the next slide, again, we're coming into this year with a relatively low foreign ownership level already. We've shown this slide again and again, and I wanted to reiterate this. This is one of the anchors of our thesis. If this lockdown happened earlier last year or late last year, at a level where the cumulative foreign flow is a bit still higher, I'll be worried. We'll see that massive foreign outflow for sure. But what happened after the announcement of the lockdown initially? So we saw some jittery reaction. We saw the market touching the almost the 6,200 level. But what happened after that? So during the market close in the succeeding days, we've seen some foreign buying, actually, some spots of foreign buying. And you see there that there are two things that are going on. So first, this is having an impact. This cumulative foreign flow that is at the 2010 level already, it's helping. Because right now, again, only 30% of the market activity is via foreign, 70% is local. And so far, we've seen also the locals supporting some positions or some stocks at certain price points. So again, going back to my point a while ago, what differentiates this performance or this market versus the initial part of the year? This one's important criteria or factor to that one: low foreign ownership level. And maybe last point to this one, remember the peso. So for a foreign fund manager, where the peso is very important. So if you, for example, buy an Ayala land at a very cheap valuation, say 32 or 33, but the peso is at a level that you have a risk of it depreciating another 5%, you can actually you're almost guaranteed, or you have the reasonable expectation already that you have a disadvantage on the peso currency side. So it's helping that right now the peso is at the 50 pesos level, and we've seen that in the market performance. Again, in the past 3 days, we've seen that some foreign buying is happening already, actually in certain names. So in the next slide, this is actually my last slide, and this one I just wanted to reiterate to our investors. Our message is that let's mentally prepare ourselves already. So mentally prepare yourself that the next 2 quarters will be volatile. It will be. So but if we have that mindset, that anchor on what we are buying, so we are investing in Philippine equities right now for that strong PSEI rebound that will happen next year or towards the late of next year. Our point is that it will be a back-ended recovery, but a very strong one. So in terms of the performance of Philippine equities, admittedly, it has been quite challenging the past few months, even the past few years. But definitely, this is not the time to give up on this asset class. So there is value. You've seen that, for example, market supporting at the 6,200 level. Actually, at that level, market is at the 2022 earnings. It's 14 times, very undemanding. So that's how we see it right now. So in terms of positioning, just to share to everyone, your money in our equity portfolios, in terms of relative performance, last month, for example, during that downturn, at least on a relative basis, they have been outperforming. And this is owing to the fact that when we invest in this environment right now, we are opportunistic on the cyclical reopening beneficiaries, but more importantly, we are selective. So this is the time where bottom-up stock picking matters. So again, when we highlight the term quality in our previous presentations, so these are companies that, yes, there will be a 2-week lockdown, a 3-week lockdown, but you can hear them saying, we can manage it. So you will not hear that for smaller companies. It will be quite a challenge for them. That's why we want to be invested in this one. So again, within the property sector, within the consumer sector, within the banking sector, it will be a challenging environment, but it will not be equally felt within those industries. Some companies will actually even end up being winners after this. So if a competitor, for example, is struggling, then that main company that we are looking at, or that leader in that industry, might actually end up benefiting with a much larger share of the pie. So with that, I hope that this helps clarify some of the concerns. I will pass it back to Jaja, and maybe we can proceed to the Q&A question to address your concerns. Thank you.
Thank you so much, Noy. At this point, we would like to move on to the questions from our audience. We would like this webinar to be as interactive as possible, so please don't hesitate to send your questions in the Q&A tab. Oh, and we have several questions coming in. So my first question for you is, what is the biggest difference of this recent fall in Philippine equities from the one that had happened in February 2021? And also from March 2020, and why is it important for investors?
Okay, so thank you for that one, Jaja. That's a really good question, and that's one of the things that we are looking at in analyzing the Philippine equities space right now. So in terms of price movement, you can use some historical figures as a basis if there are some opportunities at hand. So for example, for last year, and then the first half of this year, and the recent lockdown or the recent volatility that we are seeing on the market, what differentiates those three is the research ability to forecast or to see what will happen next with a reasonable certainty. So for example, last year, when this thing happened, our firm, from an investment standpoint, went on capital preservation mode. Why is that important? Because the level of uncertainty is high. You cannot forecast with reasonable uncertainty and say that earnings growth will be this, that valuation will be this, for several reasons. We don't know how much of this will impact the economy. And then second, the solution is not yet there for simple reason. The vaccine is not yet there. So we don't know how long and how deep it will be. So that triggers a defensive mode in terms of positioning. Now, going into the first half of this year, so in terms of, there are several factors that to watch out for in that one. So again, there is already a vaccine available globally. But at that time, there are concerns on the execution for Philippines, whether supply will be there, whether Filipinos will be willing to be vaccinated. And then second, more importantly, in terms of foreign foreign ownership level, it's still a bit elevated at that time. Now, going into this year, into the recent lockdown that we had, several factors are clear. So number one is on the vaccination. We know that this threat of a resurgence is happening, but it's happening at a time when vaccination is ongoing and it's accelerating. And it has been proven from the recent actions or the recent data that vaccine hesitancy is not there. In fact, one of the health experts that we are talking to before the term is vaccine envy instead of vaccine hesitancy. So there's a lot of backlog of people who wants to be vaccinated at this point. And then in terms of execution by the LGUs, again, they have proven that they can execute. One of the teams, according to him, one of the teams from Israel is actually amazed at how the country is able to execute the LGUs here in Metro Manila. Now, it's a different story as the vaccination moves out of Metro Manila. But what's important is that for the key economic zones, in this case, Metro Manila, it's happening at the pace that we want. So again, and then we've seen that, right? So in terms of decline in the market level that we've seen, it's quick. Again, owing to the volatility that we are seeing, investors a bit jittery now. But look at the recovery after that one. If the sentiment of the market is very negative on the market, you won't see that relief rally. It will continue. It might even test the 6,000 level. And you won't see foreign participation. So we've seen that so far. So that differentiated. So right now, again, we are adjusting our forecast, but based on the background that we are seeing, we have that reasonable level of basis to come up with that earnings expectation for this year and next year, and thus an accompanying outlook as well. Yeah.
Thanks for that, Noy. And we have another question here. How do foreign investors see the current Philippine equities valuation and the usual action ATRAM anticipates?
So in terms of foreign interest in the market, it has been negative at the start of the year and even last year towards recently, right? We are still at a foreign outflow, but in terms of the magnitude of that foreign outflow, which is very important as well, it's at a much lower pace or level versus before. And also, we've seen that pockets of investors already buying into some names, and that's important because if there's zero interest, zero foreign buying, even on the names like quality names like Ayala Land or Ayala Corporation at really good valuations, then that sends a signal that things are on their end is really negative. As an example of the type of outflow that we are looking at, at the first quarter or after the early second quarter of this year, for example, Ayala Corporation, there were large blocks of sellers selling Ayala Corporation, and the buyer was Ayala Corporation itself. So you see, we call those cleanup trades. So there are foreign sellers that just want to go out. They just give up on the Philippines. We've seen that it happened. So, but now again, those type of sellers, some of them are done already. So what we are seeing is that we are actually seeing some pockets of foreign buying in certain names. Now, moving forward, do we expect it to accelerate in a much higher phase? So it's an important factor, a driver going into next year, as we've seen in my cumulative foreign flow slide a while ago. From the period of 2010 to 2013, foreign inflow really drives the market. It's a strong booster for market. Now, they will be selective. They will be patient in terms of waiting. There's value. Some are taking advantage already. But as we've seen, I think they will be patient. So because on a relative basis, in terms of risk, there's still that risk for Philippines. And they might prioritize some other countries other than Philippines right now. But the moment we gain traction on this one, so for example, if Octa's or one of our health experts expectation that late fourth quarter of this year, Metro Manila might achieve that herd immunity at this pace, then it will bring back that interest and confidence to the Philippine market. And then last point. So again, on the peso, that's important. If we were starting this year at say a 42 peso level and the potential currency drag for a foreign investor is high, they won't. But so it's helping that level on the peso right now is at the 50 side, at least from their decision making. Yeah.
Okay, we have another question here. So you mentioned about quality. Quality is still the way to choose the stocks. What are the indicators of quality?
So when we see quality, what we mean is from a financial standpoint and a business resiliency standpoint. So again, as we've talked about, this pandemic, it impacts almost all sectors. So almost no sector is spared. But again, within a sector, the impact will not be felt the same across the players. So for example, in the consumer discretionary space, the impact to say a Jollibee will not be the same for a smaller restaurant chain. So the things that we are looking at, number one is the resilience. So resilience on the financial side and the business model side. So ability to adopt on the current environment that we are looking at, and ability to survive this crisis on the negative cash flow basis. So what's the thing to note here is on the equity base side. So when I say equity base, so retained earnings. So on the perspective of the corporates, so every time they make a strong earnings for a given year, it just accumulates, right? And it gives that war chest in terms of equity. We call it equity base to that company. Now, what this pandemic does is that if the operation is sub-level, some even negative cash flow level, it will, instead of building up that equity base, it will deplete that. So you want companies that, 2 points, have a high level of that equity base, meaning very strong credit standing at this point. And then more importantly, equally importantly, I mean, ability to tap the capital markets for needed funding if ever. So preferred shares, etc. So, and then that's on the financial or the survival side. Now, on the opportunity side, when we say quality, we talk about franchise value. So normally the larger companies, the stronger ones, they have built this brand already. That in times of crisis like this, some customers will be selective on what brand to buy, on where to go, etc. And that's where franchise value comes in. So again, moving forward, the general pie might be lesser, admittedly, because of what's happening right now. But if you have a company that's surviving and actually getting stronger in this crisis, you might actually end up in an environment where the share of that company in a much lesser pie will actually end up being bigger. So that's how we define quality right now. And lastly, it's reflecting in the stock price as well. So it doesn't end that a company is good, then that's it. So from a stock perspective, these are the same companies that we've seen that a lot of investors, when they hit a certain level, a lot of investors are trying to come in. So you see that support level. And on the company side as well, you see this buyback. So for example, Ali, they have been doing buybacks before at 32. So things like this. That is quality, right?
All right, so we have another question here. Do you expect further foreign outflow for Philippine market?
So foreign outflow right now, it's still happening and still yet may happen in the coming quarters. So this one is a bit tricky in the sense that you cannot fully judge or predict it based on the actual direction, meaning will it be buying by fourth quarter? Will it be buying by third quarter, or will it continue to be selling? What we can rely on now is the level. So again, going back to my point a while ago, if the foreign level is still high, and then you see moments like this, like reimposition of lockdown, etc. A lot of foreign investors, when they look at Philippines, they can easily say, "I just want out. I just want to be out at any price." So what we want is those profile of investors to be not there already in terms of ownership base for the country. So moving forward to answer the question, there might still be sustained foreign outflow, but again, that level might be too minimal already. But when they come in, normally they come in herds. It's a strong one. It's never a mild foreign outflow. It's always a herd type of inflow normally, as you've seen in the past few years. And that may not yet happen until they are confident with the vaccination pace, with the containment of the virus side. Yeah.
To our audience, keep your questions coming. And then we have another one for you, Noy. BSP says RRR cut is on the table. What sectors can directly benefit in the increased liquidity this unleashes?
Okay. So in terms of normally we will look at the banking space, right? So but on the general space, this is just a messaging from the BSP side that they will support the economy. So it benefits all sectors at this point. So there are different ways to which the government can support the country, can support the private sector. One is via fiscal. So that one is a bit on the stretch side right now. But the BSP, they can help by providing this liquidity into the market, and hopefully the banks can provide lending to the clients. But maybe just touching on the banking space as well. So while we are on that point, so on the banking space, it's a cyclical sector, but we are still cautious on that one. So when we say quality of asset is one of the things that we look at, right? So for the property sector, for example, you know that what their assets are land. So yes, there could be fluctuations on the value, but it can recover. If it does recover, that value of the land or that land is there, it's intact. But from a bank's perspective, if you lend to a borrower and that borrower defaults, so that asset, it's a paper asset, it's gone forever. So that's why we are particularly how do you call this, rigorous when we are looking at the banking space. And right now, our assessment is that yes, there could be some value on it, but we need to still be cautious. But that doesn't mean that we should not invest within the sector. So we are selective. So within the space, we want high quality banks. So high capital adequacy position, so solid space, solid branch network, and the ability to capitalize on what's happening right now, the digitalization trend. So we want banks that are shifting or preparing to shift to that model. So yeah. So to answer that question, it will be helpful for all, definitely.
Okay, another question here for you. Based on ATRAM's view, should investors redeem from their investments during the 2 weeks of ECQ or just leave it?
Again, sorry. Can you
Based on ATRAM's view, should investors redeem from their investments during the 2 weeks of ECQ or just leave it?
All right. So that question is related to timing, right? So can one thing that to earn money in the market is via trading it, right? So sell it at the 7,000 level, and then buy it at the 6,200 level exact time. So timing it perfectly. It's easier said than done. A lot of times, a lot of research has been done already on this one. Relying an investment decision on that trading perspective is a bit challenging and might be dangerous in the long run. If it were me, my advice is to be comfortable on a certain level. So meaning this one, if you look at the 6,500 level, the 6,200 level, there's value. So yes, the market may, we don't know, right? Maybe they will become jittery again in the coming weeks when the lockdown starts. What if they do not, right? So this decision makings based on what if is a bit dangerous. Again, what we want to highlight is to be reliant on data and have that framework already. So I suggest we mentally prepare already ourselves that the next few quarters will be volatile, but have that mindset that if it reaches certain level, I'm willing to buy more, right? So with that mindset that what I'm buying is that recovery going into next year. That's my recommendation to how to approach this one. Yeah.
And just to add on it, so long-term investments and that we see markets will recover over the long term. Okay, so we usually, for investing, it's usually for long term. Okay, so Noy, let's see, we have another question here. So almost everyone has prepared for the new normal. Hence, the effect of the pandemic is now somehow being capped. However, have you thought of preparing for a situation where the world returns to the old or the usual normal? Will there be a sectors affected if such thing happens?
If I understand the question already, please correct me if I'm wrong.
Yeah.
So the question is, what if we hit an old normal?
Yeah. So, what if we return to the old normal?
All right. Okay. First, my comment on that one is, it can happen, but I think the likelihood of that happening is a bit low. So this pandemic has created a lot of changes, some of them permanent for some sectors. It has created, it has accelerated some trends. So the way we do transactions, for example, on the GCash side, I'm sure everyone is familiar. I hope a lot of us here are investing via GCash as well. It's something that's not too popular before in terms of behavior of the customers. E-commerce, for instance, as well, and a lot of other sectors. So yes, it can happen, but based on, we've studied this one, based on our research and our conversations with industry experts as well. We are anchoring our investment decisions or our positioning, at least on the equity portfolios, with that mindset in mind. So for example, within the banking space, we want banks that are headed towards that digital trend. We want to be invested in Converge, for example, and so things like this. So to answer that question, it can happen, but our assessment, our take is the likelihood of that one is low. Yeah.
All right. So I think that is all the time we have for now for question. Once again, thank you, Noy. And of course, thank you to our audience. We appreciate you taking the time to join us today. I'm sure you guys are interested to learn about how to invest in ATRAM funds. Please tune in to know more.
Hello. To open an account with ATRAM, just visit our website at www.atram.com.ph. Here, you can learn more about all the funds and services that we offer. Our site will then guide you to our online investment platform, Seedbox, where you can start investing for just 1,000 pesos. But if you have more questions, visit the website's Frequently Asked Questions page or ATRAM Academy page. Thank you.
Again, if you have any friends who you think would like this webinar but unable to attend, Feel free to share the YouTube replay of this session, or please tell them to visit our YouTube channel, ATRAM Studios. We also would like to invite you to join ATRAM's official Viber community group, #ATRAMPH community, to stay updated on the latest announcements, advisories, and reminders. Scan the QR code or visit this link, http://bit.do/ATRAMPH, and get a chance to win ATRAM merchandise. Lastly, we hope you could please take some time to answer the survey at the end of this webinar. We want to know your thoughts on today's topic. On behalf of everyone at ATRAM, we thank you again for your attendance and participation. We wish you and your loved ones continued health and safety. Have a great day ahead.